Good morning, investors and traders. In today's segment, we'll be focusing on oil prices and trying to figure out where the oil price is heading from here onwards. Because obviously, we have seen a tremendous rally from the recent lows, and the price has crossed a significant price level. So, we will analyze several different opportunities in this segment. If you haven't subscribed to our channel, I highly recommend you to do so. And here is risk warnings and disclaimers in front of you. Briefly about myself, I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for EverTrade. Now, the chart which is in front of you, this is the daily chart for crude oil, and we are looking at the naked price action, meaning we have no jingle bells, we have no indicators, we have nothing at all apart from the fact that price and the price itself. So what the price is really telling us that more recently that the oil prices, because of Omicron, like this particular sell-off was triggered by that COVID variant. If you don't know what Omicron is a variant of a COVID-19. When the news broke out, several different countries started to put restrictions because of Omicron, travel restrictions to stop the spread. And because of that, investors started to worry that this is going to negatively influence oil prices, because we have seen the evidence of that back in 2020 when oil prices dropped sharply on the back of that particular news. Oil prices went all the way to in the negative territory, something that we never ever seen before. It was the very first time that we see such a correction. As you can see from here, oil prices went all the way from the $64 price level to 480. In fact, on this platform, it is not showing that, but during the COVID crisis, oil prices went in negative territory, something that we never ever seen before. So because of these particular concerns, investors and traders were highly concerned, and that concern triggered a sell-off in oil prices. We have now 1, 2, 3, 4, 5, 6 weeks, 6 consecutive weeks of sell-off. And then there was a lot this particular week we have seen the rebound in oil prices. The rebound happened because now traders are less worrisome about the COVID crisis. They believe that Omicron isn't really going to be that destructive in terms of the supply chain, in terms of the restrictions. There will be no national lockdowns around the globe, and because of that, we are seeing oil prices rebounding. So that is the fundamental behind the story. Now, in terms of our technical levels, it was this particular price level 61 to 63 where the prices came and now moving back to the upside. However, the prices have entered into a critical area of resistance, which is right over here. What we can also say is something what in the trading language is called a double top. First top being over here, the second top being right over here where the price is trading right now. Now, usually double tops are a reversal pattern, i.e. the price usually tend to move to the downside. Now, if the price moves to the downside, and if we do see a momentum to the downside, what potentially could happen is price could come into this area of support right over here between 67 to 66 sort of a price level. If it comes, that could be great opportunity, because then that would mean that the prices we could see more buying taking place and the prices could sharply bounce from here. Otherwise, what could potentially happen is that as the price forms its double top, and then remember the double top is right over here in this area, the opportunity to trade that particular trade or that particular opportunity is the moment the price breaks out of this particular zone, you can take that trade. In those circumstances, your risk, or let's just say your stop loss, is really only going to be this particular area, but your reward, all of that is right over here. So you still have a decent more than 2 to 1 risk to reward area. Why? Because we believe that the minimum the price, once it will break out of this particular zone, the price is more likely to go into this area of resistance, which runs from 77 to all the way to 79. So all of this area over here between 77 to 79 is the area for as a target. So your stop loss right over here, just between this particular zone, your entry the moment the price comes out of that, represented by the green arrow. Your profit margin is over here. This area is only your stop loss, this area is your profit margin, and this is your resistance level. So keep an eye on these particular price levels for crude oil prices. I've explained the fundamentals which are driving the prices, and we have also explained the opportunity. If the price doesn't make this particular pattern, then we could see this area as an area of support, and we could see potentially another move to the upside. Make sure you subscribe to our channel and smash that like button. We'll be back with more analysis. Until then, stay safe and adios.